This is RSI and MACD, and if you ever watch any random YouTube trading video, I can guarantee that you've seen these indicators. The problem with these indicators and almost all other indicators is that they will never help you profit.
Houston, we have a problem.
They only give you entries after price has made a very big move. Take a look at RSI. We are told to buy at 30 and sell at 70. But I can show you 1,000 different cases where RSI is at 70 and price keeps going up and up and up. Imagine you took a sell at RSI 70 right over here. You would have been liquidated before you can even say the words
Donald J. Trump.
If you have ever tried making money trading, these are strategies you've seen. Support resistance, supply and demand, RSI, stochastic indicators, Bollinger Bands, and a whole lot more. You name it, I've tried it. And I lost a grand total of $80,000 before seeing a single cent of profits. But what if I told you that you don't need any fancy constantly losing indicators to be profitable, and that all you need are candlesticks that are already right in front of you? If you don't know who I am, my name is Nick, and I've been live trading in front of thousands daily for over 2 years now, and I have absolutely nothing to sell you. I do these videos because I was confused with trading when I was a beginner, so I know exactly how you feel. And I don't want you to spend money on stupid courses when all the information out here is for free. I've spent hundreds of hours backtesting this specific strategy, and I poured my hard-earned money into these markets to devise a trading strategy so stupidly simple that even my 4-year-old nephew can trade. So in this video, I'm going to give you one of my bread and butter models with absolute sniper entries, which nets me hundreds of thousands per month in withdrawals and can make complete beginners hundreds, if not $1,000 days. Just take a look at my 7,700 testimonials right here. This is one of the setups that I look for daily because it simply keeps printing me money. This trading model is just built on 2 key concepts. Number 1, liquidity. Number 2, market structure. Let's start off with the most important one, liquidity. Many traders overcomplicate this concept and use several other buzzwords with hundreds of different lines and boxes on their charts just to sell you a $997 course. But I promise you, by the end of this video, you'll be able to understand liquidity, how to mechanically spot liquidity pools thoroughly, and finally, how to catch high probability trades using this strategy. In its simplest form, liquidity is where stop-loss orders reside in the market. Again, I'm not going to bombard you with advanced logic or terminology. I'll just give you exactly what points you need to pay attention to. You'll be paying attention to these 2 liquidity pools only: previous X highs and lows, and session highs and lows. Let's talk about them in more detail. The X in previous X high and lows, or PXH/L, is referring to the weekly, daily, 4-hour or 1-hour highs and lows respectively. This means that you can go to the weekly, daily, 4-hour and 1-hour timeframes to mark out the respective previous candles high and low. These are key liquidity pools. On to session highs and lows. Sessions are time windows in the market where the trading volume is at its highest. The session timing to refer to are the respective kill zones. The timing will be all referencing the EST/the New York time. If you need to convert it, just search for the converted time on Google. The timing are as follows. Take a screenshot right over here. Now, I don't want to go into too much details about the kill zone, but if you want to explore them further, you can click on this card right here, which gives you a lot more information. Let's go back to session liquidity. So these are the only 3 sessions I'm paying close attention to. So I usually mark out the highest high and the lowest low within these time windows to determine my session liquidity pools. But recently, I found an indicator that marks these out for you so that you don't have to manually mark it out. Just go to TradingView, click on indicators, and search for ICT kill zones plus pivots, bracket TFO. Then change your settings to these. After copying that, your chart will look something like this. The blue lines marks out your Asian liquidity, the red line marks out your London liquidity, and the green lines marks out your New York AM session liquidity. This indicator makes it super easy to identify key session liquidity pools for you to frame trades in. That's it for liquidity. Simple, right? I told you it didn't have to be complicated. Now, let's go into market structure. Market structure is a very large topic and there can be a ton of details. But for this strategy, I only want to focus on the change of character or chalk concept. Now, if you're new to this, a change of character is a sign of a potential trend reversal. For a bullish change of character, what you're looking for is a recent lower high being taken out, with price setting in a new higher high. Similarly, for a bearish change of character, you look for a recent higher low to be taken out, with price setting in a new lower low. That's all you really need to know for this specific strategy. But if you want to dive deeper into market structure, then click on this video here to find out more. Now, before we get into the actual trading strategy, we want to understand the logic behind why this strategy works so damn well. For those of you who are completely new to this term, a liquidity sweep basically means when price wicks a key area of liquidity. When we sweep a key liquidity pool, we expect price to move to the opposite end of liquidity. For example, if we sweep an Asian low, we expect to target the Asian high. Similarly, if we sweep the previous 1 hour candle's high, we expect to target the previous 1 hour candle's low. With that, let's go into the actual trading itself. I'm going to group this into two different categories: bullish trades and bearish trades. We briefly discussed this earlier on, but for bullish trades, we want to see a sweep of a low to target a high. Similarly, for bearish trades, we want to see a sweep of a high to target a low. Let's go through a rough outline of a bullish trade. Step 1 is to look for a low to be swept. For a quick refresher, this can be a previous X low or a session liquidity low. Step 2 is to look for a bullish change of character on the lower time frames. Now, when I say lower time frames, I'm mostly referring to the 1, 3, and the 5-minute time frames. I'll discuss this in more details when we go through the actual trade examples. The reason why a bullish change character has to happen for us to capitalize on bullish trade is that when price comes to sweep a low of a liquidity pool, it creates a low time frame bearish structure, as you can see right over here. So, to confirm a sweep, we need the most recent lower high to be broken through with a body candle close. This shows the price intentions to reverse and continue pushing up after sweeping liquidity. Finally, all that's left to look for is the retest of the bullish change of character level. That's your entry trigger. Your stop loss will be at the most recent swing low, targeting the opposing end of liquidity. Now, for a bearish trade, just exactly take what I said and flip it. Step 1 is to look for a high to be swept. This can be a previous X high or session liquidity high. Step 2, look for a bearish change of character on the lower time frame. This is when the most recent high low is close to below, setting in a new lower low instead. This confirms the sweep. Step 3, look for the retest of the bearish change of character level, with stop loss at the most recent swing high, targeting the opposing liquidity for your take profit. With these rough drawings out of the way, let's get into actual trade examples and how you can use this strategy effectively on the charts. First things first, my absolute favorite pairs to trade using this strategy are XAUUSD, which is gold, Euro US dollar, and GBP US dollar. These pairs are just a lot more volatile and tends to respect key liquidity pools better than most other pairs, and has given me the best result overall. Now let's start off with our very first example. This is the 15-minute time frame on GBP US dollar. Our indicator has very nicely marked out our London highs and lows for us. Let's see which side we take out first. As you can see, our London low has been raided. Now, let's think back to the strategy steps. Step 1, wait for price to sweep a high or low. Since we have raided the London low right over here, our attention is turned to a bullish trade idea. That's step 1 done. Step 2 is to drop to the lower time frame to look for a bullish change of character. So, let's take a look at the 3-minute time frame to see how price action forms here. Again, this is our London low. Let's see if we can get a bullish change of character after sweeping the London low. Right there, we have a bullish candle closing above this swing high right over here. This sets in our bullish change of character and confirms that we have swept a London session low. So all that's left to do is to place a buy limit at the retest of the change of character level, with stops at this swing low, targeting the London high. Let's see how this trade plays out. As you can see here, we are expanding higher very aggressively. So at this point, I decide to extend my TP to the New York PM highs right over here, which is marked out by this orange line on the indicator. I do this because I want to capitalize on the momentum of price. This allows me to milk as much as I can out of the market on a more volatile day. When price action is high probability, you need to make sure to capitalize on every single pip possible. And as you can see, extended TP hit. This is a classic session liquidity rate example. So now let's move on to our previous X high/low rate example. This is the 1 hour time frame on XAUUSD. Our indicator marked out the previous day's New York PM highs and lows. And as you can see, this one bullish candle sweeps the low and then takes out the high. Going back to the steps again. Step 1 is for price to sweep a high or a low. Now, since we have taken out both the New York PM session's high and low, the next most important area of liquidity is our 1 hour high. So, our attention is turned to a bearish trade idea because we anticipate that this high is being swept. That's step number 1. Step 2 is now go to the lower time frames to look for a bearish change of character since we have swept a high. Now, because we only took out the previous hourly candle high, we can only use the 1 minute time frame to find our entry in the form of a 1 minute bearish change of character. This line is above our previous hourly high. So let's see if we can get our bearish change of character right here. Right there, we have a bearish candle closing below this swing high over here. This sets in our bullish change of character and confirms that we have swept past the previous hourly candle high. So all that's left to do is to enter sells here at the retest of our change of character level, with our stops at this swing high targeting the previous hourly low. So let's see how this trade plays out. Price retests the change of character level, digs up higher one more time, and then drops aggressively to the prior hour's candle low. TP smashed. There you have it. A simple yet effective strategy that cuts out all the fluff and fancy buzzwords. That being said, this simple strategy has some nuances. Avoiding low probability conditions is crucial for any trading strategy to perform at its absolute best. Let me share some examples of low probability conditions so you know how to avoid them and can execute this model at its highest level. The first thing is to pick a pair with high volume. I gave you 3 of my favorite pairs to trade using this strategy earlier on. In case you missed it, those 3 pairs are Euro US dollar, GBP US dollar, and XAU US dollar. Trading low volume pairs such as exotic currencies like ZAR or more obscure pairs like AUD NZD, Euro NZD, or CAD CHF. These instruments generally do not have a ton of trading volume throughout the day, and that means we do not have enough fuel to push price to where it wants to go. Next, you want to trade this strategy during the Asian, London, and the New York AM sessions. I've tested it over several hundred trades, and I can say with absolute certainty that it works best during these sessions. Trade anytime outside of these hours, your win rate will plummet. Thirdly, avoid untradable high impact news at all costs. This means non-farm payroll or NFP, CPI, and FOMC statements. These news drivers inject tons of liquidity into the market. This does not only drastically decrease the technical analysis accuracy, but also introduces major slippages, which can cause you to be stopped out for way more than you actually anticipated. That's it. Here's my bread and butter liquidity sweep strategy. I genuinely hope that this was worth the attention you paid. If you have gained or learned anything from this video, consider liking and subscribing to this channel down below to get notified when I take these trades live. Now, as I said earlier in this video, if you want to dive deeper into the nuance of this strategy, you should be diving deeper into kill zones and market structure. So if you really want to level up, then click on these videos right here to increase your accuracy of this liquidity sweep strategy. And with that, I'll see you guys in the next one. Nick signing out.